Today I'm going to make a start with some past paper activities. You can use these questions to help you prepare for your upcoming trials papers. So all these questions I've taken have either been taken from Education Department questions or else some of my own questions as well. So today we're going to do a video on income statement where they just ask income statement on its own. Right, so if you have a look at what's required, first of all, some true and false. You'll find you get these short questions at the start of every question, and those are usually fairly straightforward, so it's a good idea maybe to do all the short questions throughout the paper and then go back and do the other stuff, but that's up to you, obviously. Okay, the first thing is asked whether it's true or false. The Companies Act requires that financial statements are published within 6 months of the financial year end. One of the requirements is that the information that you publish is done in a timely fashion. So you can't wait too long before publishing for financial statements, so that statement there is true. A fixed deposit maturing within 1 year is a current asset. Okay, remember current assets are converted to cash within a year, and any fixed deposit maturing within a year gets recorded under your cash and cash equivalent note. So that statement is also true. And then the statement of comprehensive income, which is another name for the income statement, shows the financial position of the company. That is false. Your income statement shows how much profit you have made. It's your balance sheet that shows the financial position of the company. Alright, moving on. We get told that we have information related to financial year ending 29th of February, and you're required to calculate the correct net income after tax. You must indicate plus or minus for each adjustment, and then they give you an example to show how to display your answer, and that must be included when calculating your final answer. So the first example here says the telephone account for February is still due. Remember, you're trying to record the amount that you should have paid. So if you haven't recorded that telephone, then you're going to need to add that to your expense. If you add to your expense, your profit is going to decrease. I've just put my negative numbers in brackets, but strictly speaking, I suppose you are supposed to put the negative sign. Okay, the next one. According to stock taking, there was a stock deficit and unused packing materials on hand. Okay, starting with the stock deficit. The stock deficit is an expense which decreases your profit. So you're going to subtract your profit from your profit there. With your packing material that you've got on hand, normally when you've got packing material on hand, you subtract that from your packing material expense. If you decrease your packing material, that has the same effect of lowering your expense and therefore increasing your profit. So you will add that 1,500. Okay, then insurance included an annual premium of 4,800 paid on the 1st of January. If you look at this, January and February fit within your financial year, but the other 10 months don't. So you've prepaid here. When you've prepaid 10 months out of the 12, you're going to decrease your expense. So you subtract from your expense. If you subtract from your expense, your profit is going to increase. Okay, then this next one is a little bit more tricky. They tell you that the bookkeeper was unsure how to record the transaction. Now, normally you get given gross salary here, but in this one they told you net salary. Remember, net salary is after you subtracted your deductions. Added to the fact that they told you net salary, they didn't give you a pay as you earn either. So they just told you that was 25% of your gross salary. And then your other deductions are 4,200. Now if you think about it, if I take net salary and I add my other deductions back, that will be equivalent to 75% of your gross salary, because the only thing that hadn't been subtracted will be the 25%. So what I'm going to do over here then is I'm going to take my net salary, I'm going to add back those deductions. That is 75%, so I divide by 75 and I want 100. So that's where I get the 23520 from. And then it tells you as well that there are also contributions. So those are additional expenses that the company pays. So you're going to add your contributions on here, and all that is going to decrease your profits. The tenant had paid rent 1 month in advance. The tenant occupied the building since the 1st of September and had paid $91,000. The bookkeeper omitted to process the adjustment entry. If you count the number of months that the tenant would have paid for, it will be September, October, November, December, January, February, and one extra, which is 7. So you take the 91,000 and you divide by 7. That would need to get subtracted from your rent income. And if your rent income goes down, your profit is going to go down. Okay, moving on. Debtors' allowances appeared in the operating section of the income statement, had not been closed off. Now, if you think back, you're supposed to minus debtors' allowances from sales. Whether you minus debtors' allowances from sales or show it as an expense, then they mean the same thing. So that debtors' allowances entry is not going to affect your net profit. You subtracted debtors' allowances when calculating this net income here, but whether you subtract as an expense or subtract it as you're supposed to from sales, you end up with the same results. Okay, then the loan statement appeared as follows. They give you a balance, repayments, and a balance at the end of the year. So we are going to now try and calculate the interest that we've been charged. So the way I do that here is I start with the loan at the beginning, 160,000. I minus the total payments that I made, plus something which is going to be your interest, and that must give me my loan balance at the end of the year. And then if you solve for X here, you're going to get your interest being 13,000. Interest is an expense, so therefore you're going to decrease your net profit. Right, then the next one, an invoice received for stationery purchased was recorded as 197 instead of 107. So our expense was 90 Rand too much here that we recorded, so you need to add back to get your net profit. H, interest on fixed deposit is 1,500 and an amount of 900 Rand appeared in the pre-adjustment trial balance. Please remember that if something's in the trial balance, it means it's happened already. So you should have received 1,500. You've already received 900. So it's only 600 Rand that you need to add by here. And then the provisional tax paid for the year is 320,000 and exceeded the tax expense for the year by 13,500. In this case, we paid more tax than we were supposed to. Okay, the amount of tax we should have paid should have been less, 13,500 subtracted from the 320,000. Now, because we are asked to calculate net income after tax here, then the tax that I should have paid must end up in my answer column here, and then you just add and subtract, and that will give you your net income. So in summary then, these are the things I suggest you remember. First of all, any amounts that are due at the end of the year, that means you haven't paid or received enough, which means you're going to have to add those amounts in. Now, if you're dealing with an income here and you add to your income, profit will increase. However, if you're adding to an expense, the expenses decrease profit, so profit will decrease. Any amounts received or paid in advance get subtracted because it's the amount that you've received or paid is too high. If you're talking about an income and you subtract from an income, then your profit will go down. If you subtract it from an expense, the lower your expenses, the higher your profit. And then the last thing I need you to remember is that in the income statement, you're going to record the gross salary or wage. That's the total cost to the business, and it's in the payables note that you show of the gross wage, so much is owed to SARS, so much is owed to pension, so much to medical aid, and the net wage owed to the worker. Okay, so this question was income statement only. Usually I've noticed in the trials or finals paper, they give you income statement on its own, but they add to that a couple of notes as well. Or they'll give you balance sheet section on its own and ask you a couple of notes. So it just depends on the question. I've decided to separate income statement, and I'll do another video on balance sheet. Okay guys, that's all for now. Thanks.